We often talk about how many billions have been wiped off the ASX when it falls a lot, but let's pause and reflect that $135 billion has been wiped onto the local share market since the start of last week in an almost unbroken series of gains, with the big caps like CSL, Wesfarmers, BHP and Commonwealth Bank leading the way, although the banks did go backwards today. Now, that 5% rise in the Australian market over the past week and a half has coincided with a similar rise in New York and a 20% fall in oil futures, half of which happened yesterday and the day before. Is this cause and effect? Oil down, shares up? Well, it's partly true, that's for sure, but the correlation between oil and the share market is pretty loose and recent. In June, they both went up. It's got more to do with earnings, actually, with quarterly reports now beating most optimistic forecasts of Wall Street analysts. Last night, SpaceX produced its first quarterly, much better than expected, although the share price fell in after-hours trading because Elon Musk spooked investors with his plans for colossal spending on data centres. Also, the oil price is falling on smoke from the White House rather than any actual opening of the Strait of Hormuz, which remains closed. Although it's pretty clear what will happen. The US is going to lose and Iran and Oman will charge to go through the strait, which means it will be open. Meanwhile, the Aussie dollar is becalmed like a ship in the Persian Gulf. And finally, the census calculates home ownership at 66%, but that counts adults living with their parents as owners of the house, along with the parents. But they don't, of course. If they're excluded, as they should be, the rate of home ownership falls to little more than half. And that's finance.